Hi friends, today we'll discuss few more previous exam papers related to banking POs and clerks, which becomes the first bank in India to use satellite data to assess the credit worthiness of farmers. The bank is ICICI Bank. So what is credit worthiness? Credit worthiness is a lender's willing to trust you pay your debts. Bank considers credit worthiness of customers to willing, able and responsible enough to make payment as agreed. So credit worthiness is like identifying the customer credit worthiness, whether he is willing or is able or is responsible to repay the monthly installment or quarterly installment. So mainly we call it as 5 C's to determine the credit worthiness. So customer's character, capability, capital, conditions and collateral. So credit worthiness is depend on the 5 C's. The 3 credit reporting agencies that measure credit worthiness are Experian, TransUnion, Equifax. So how the banks will determine the credit score? Depend on the customer's credit score, loans will be sanctioned. Up to certain level they'll call it as poor, up to certain level they'll call it as fair, then good and excellent. So depend on this credit score, banks will sanction the loans to the customers. So this credit score will be depend on the customer's previous track. If customer would have taken some loans and how he was paying, whether he is regular or how is any dues are there, depend on this one, how he is repaying, depend on that one, the credit score will be going down or going up. Under which section of RBI Act 1934? RBI has the obligation to undertake receipts and payments of the central government of India and to carry out the exchange, remittance and other banking operations. It is under section 20. So what is exchange? Exchange means conversion of money from one currency to another currency. Remittance is payment of money that is transferred to another party. So banks will do the conversion from one currency to another currency, remittance. So amount will be transferred to another party, depend on the government instructions. The RBI recently issued guidelines for the interoperability of e-wallets. In which of the following ways can wallet interoperability change the payment game? Allow transfer from one wallet to another wallet through UPI. Allow transfer from wallet to bank account through UPI. Wallet companies can issue debit cards. What is wallet? Mobile wallet is known as mobile money or mobile money transfer. It is the digital version of wallet that you can carry in your pocket. It stores payment details like credit and debit and cash balance, which can be used to make payments. With the wallet money, you can transfer money and you can purchase, and in this wallet you can see the debit and credits of. So some e-wallets, Paytm, Mobilink, Amazon Pay, these are the e-wallets. How e-wallets will work? You can see how the customer will be doing the transaction, how it will go to the gateway, then how it will reach the final destination. You can see interoperability of wallets means send and receive money from various mobile wallets. So you have a Google Pay, you have a Phone Pay wallet. So after this interoperability, money can be transferred from one wallet to another wallet. Allow transfer from one wallet to another wallet through UPI. Allow transfer from wallet to bank account also through UPI. Whatever amount available in your wallet, it can be transferred to your bank account. or it can be transferred to another wallet. You have a money in Google Pay, it can be transferred to Phone Pay, or it can be transferred to Mobilink. Wallet companies can now issue cards. So wallet companies can issue debit card. Now you can use the debit card, automatically this amount will be debited or credited in your wallet. So you can see like from one wallet to another wallet, Paytm to Freecharge, from Freecharge to Mobilink, and second one will be transferring money from your wallet to bank account, and third one you can see like debit card issues against the e-wallets. What is the minimum capital requirement for starting a small bank? Is 100 crores. According to the RBI draft guidelines issued in August 2014, small banks can set up with a minimum capital of rupees 10 crores. The same way 500 crores requirement for the normal commercial bank. So you want to start any small financial bank, you need 100 crores capital. If you want to open any normal commercial bank, you need 500 crores capital. What is capital? The money that a bank has obtained from their shareholders or investors. So these money will be used to start your business or develop your business. Which of the following organization is the nodal agency in the Ministry of Finance for gathering and disseminating intelligence related to finance in India? Central Economic Intelligence Bureau. Central Economic Intelligence Bureau is an Indian intelligence agency responsible for gathering information and monitoring the economic and financial sector for the economic offences and warfare. So headquarters in New Delhi, started in July 1985, controlled by Government of India. Which of the following institutions in India biggest clearing and settlement agency for government securities, money market instruments and currencies is CCIL. So when you are doing a settlement for the government securities or money market instruments or currencies and buying, the settlement will be happen through CCIL. What is CCIL? Clearing Corporation of India Limited. Improve efficiency in the transaction settlement process. Settlement will be like two banks will be doing the transaction. End of the day, whether X bank has to pay to Y bank or Y bank has to pay to X bank. These will be done through the settlement. And CCIL started on 30th April 2021. Thank you friends. If you like my video, please subscribe and share with your friends also.